Hi, thanks for joining me. In today's video, we're going to touch on a topic that I know a lot of people have had questions with, and that unfortunately from reliable sources we've received unreliable information. That is, can you have the PPP SBA 7A loan and an EIDL SBA 7B2 loan? So, how are these things administered? Both the SBA 7B2 and the SBA 7A loans. And can you have both at the same time? So first, let's look at what that is. The EIDL grant application that you put through is actually an EIDL loan application. It is administered by the SBA, so unlike the PPP where you went to your banker, remember you went to a site on the SBA side and you sent in information. That's the normal way that this loan is administered. We're just doing it in abnormal times. Usually it is at a state level that a declaration of disaster has happened, and that's what opens up the availability of this loan for business owners. Added to the loan in the CARES Act was that SBA B2 grant. So this is a slide you're familiar with, but I wanted to just remind you that we've got a loan element and a grant element. Many of you have not received that grant, and when you do, and what you will find is the SBA will reach out in the future and let you know you've been approved for a particular loan. Those terms and conditions will be known when you actually get the loan itself. The grant part of it, that's the $10,000. That's what's supposed to be the low documentation review. In this case, the full loan was that low documentation review. And the grant does not require being included in that PPP loan forgiveness request. The grant has a dedicated application site and process. Now, on the PPP loan, that's where we're using that SBA 7A lender system. So the bankers that are there, and then that has been expanded significantly. And I know a lot of you have had a lot of frustrations getting that over the finish line. A lot of us are still continuing to delay and monitor, but we want to be as prepared as possible with our application so we can continue to see what the federal government's going to do in terms of funding. These are two separate loan tracks. That SBA B2, that loan track has this grant element to it, but it is still its own loan track. As we reviewed previously, we can use the grant and the loan in the EIDL aspect for similar purposes of the PPP loan use. And I'll talk a little bit about the timing of how you utilize those funds, but no, they cover a lot of the similar fixed costs that we're dealing with as we struggle through not having our practice open. So why were we confused about the fact that you weren't allowed to have both? Well, in the interim final ruling that came through on April 2nd, there was the language that during the period beginning February 15th, 2020 and ending on December 31st, 2020, an applicant has not and will not receive another loan under this program. And that's very broad terms. Can you apply for more than one PPP loan? In that instance, no, the administrator, in consultation with the secretary, determined that no eligible borrower may receive more than one PPP loan. So what's the program? What's the PPP versus the EIDL loan? What are we talking about when we have this restriction out there that you can't apply for both? So, Temporary New Business Loan Program is the actual title of the section. That the SBA itself identified that under a new 7A loan program titled the Paycheck Protection Program. So now we are separating ourselves 7A loan program versus SBA 7B2 loan. That's a totally separate program. And then in Section 3, under first title of General, Congress authorized a program level of $349 billion to provide guaranteed loans under this new 7A program. So that restriction to go back and apply for an additional loan under this program is not under the SBA's authority. It is under the SBA's authority as defined by SBA 7A and further refined by the PPP, by the Paycheck Protection Program. Ultimately, the federal government wants to safeguard that $349 billion from people coming back to the well on a reoccurring basis. One of the other areas that we saw where this confusion was kind of compounded, how can the PPP loans be used? And then Section 7 under that says you can apply for a PPP loan. However, if your EIDL loan was not used for payroll cost, it does not affect your ability to apply for a PPP loan. If your EIDL loan was used for payroll cost, your PPP loan must be refinanced into, or your EIDL loan must be refinanced into that PPP loan. So it felt like there was this restrictive language that combined these two programs that would not allow for the separate lending under the SBA B2 EIDL loan program. And again, many of you have not seen or had the opportunity to even review what your EIDL loan opportunity even is. So the clarifying language that came out even in the application itself on that same day, one of the original certification languages said the applicant has not and will not receive another loan under this program. Still, that really broad term of art that caused so much confusion. While at the same time the interim guidance came out, they refined that you will not receive another loan under the Paycheck Protection Program. So what does all that legalese language mean in terms of how do we operate as a business owner? Well, there's a couple points I want you to take away from that. You may have an EIDL loan and a PPP loan, regardless of its origination date. If you have accepted an EIDL loan, it does not prohibit you from participating in the PPP program. If you participate in the PPP program, you may pursue or accept an EIDL loan at some point in the future. And if you accepted an EIDL loan prior to April 3rd, which not many of my clients had the opportunity to do, but it might be the case that some who view this video did receive an actual loan under the SBA 7B2 EIDL program. If you did accept that loan before April 3rd, and you did not use any dollars for payroll, you may roll that into the PPP. If again, you are in that rarefied air of having accepted an EIDL loan prior to April 3rd, and you use some of those dollars in your payroll cost, to cover your payroll costs, then you must roll that loan together. So, I like graphics. What does that look like? Well, if you actually received the EIDL loan before the PPP started, before that April 3rd deadline, and you used it for payroll cost, you must roll that into the PPP. If you received that loan and you did not use it for payroll cost, you may roll that into the PPP. The PPP has significantly better interest rates, although it might be a shorter term, and it guarantees the ability to pay it down in the future. You have the opportunity to prepay that. You don't have any restrictions there. That might not be the case for the EIDL loans. Traditionally, an SBA 7B2 loan contains significant prepayment penalties. Now, the vast majority of you will receive an offer for this EIDL loan. When we have those terms and conditions and we understand what that is, we'll work with you to say, do we want to accept it or not? But you have the option to accept it. Now let's play this out. So let's say we applied for the PPP, we get our dollars, and that loan is originated on April 13th. And at some point over the next 8 weeks, we have an EIDL loan that we can accept, and start that process. How would you want to manage those two loans? Keep your PPP dollars separate from your EIDL dollars. Use your PPP dollars to cover the costs that are allowable for forgiveness because we've got that 8-week period, and because that loan, that EIDL loan, was not originated before April 3rd, so we cannot roll it into the PPP loan. So if we get that acceptance at any point, favor utilizing the PPP loan first. Make sure that we use as much of the proceeds from the PPP loan for forgivable expenses. Remember that 75% threshold for payroll costs when we go to forgiveness. And after that time period is done, or after those funds are exhausted, and we choose to accept that EIDL grant, that's at the point that we'd start to utilize those dollars. So not only you can have both of these loans, depending on when they're originated. We've got either options or we've got a must in terms of putting that into the PPP. If we accept the loan afterwards, let's be very conscious about where it is we're spending those dollars so that we can maximize the forgiveness for that PPP loan, so that when we have the EIDL loan, we also have as much capital flexibility as possible. So very confusing subject. I hope that provided some level of clarity. Thank you very much.